Good morning, this is the latest market news. I'm Uliana. Asian stocks were mixed on Friday as the market digested earnings reports from some of the region's largest companies. Once again, Japanese stocks were the top performer for the week, up 4.8%, as the rally that started in November maintained its strong upward momentum. The week was broadly positive for regional markets as the appetite for stocks remained high. Australia's ASX 200 was up 3.6% week to date, and South Korea's Kospi 2.1% higher over the same period. Only mainland China's Shanghai Composite Index was in negative territory, down 2.5%. On Friday, Japan and South Korea took pause at the end of a week of gains. The Nikkei stock average was up 0.2%, while the Kospi Composite lost 0.3%. The yen remained soft against the US dollar for much of the week, supporting the stock market as the local earnings season got underway. While the yen remained weak, the dollar failed to breach 100 yens, hovering below the much-watched level throughout the week. On Friday, the dollar weakened to 99.07 yens from 99.25 late Thursday in New York. The sterling has been the biggest mover overnight, very significantly following the release of a better-than-expected GDP print. Rising by its largest amount since July, against the US dollar, the British economy expanded by 0.3% in the first quarter of this year, comfortably beating the forecasted figure of 0.1%. Rallying by staggering 200 basis points, the sterling is significantly stronger against the greenback, this morning trading at a rate of 1.5432. We'll continue with the GDP data today, this time with the US advanced GDP. Japan also has a thing or two to say and will be holding an official Bank of Japan press conference to do so. In between, we'll hear what SNB Chairman Jordan has to say as well. US advanced gross domestic product 12:30 GMT. Yesterday we saw the UK preliminary GDP. Today it's the US turn, with the release of the advanced GDP data half an hour after noon today. Unfortunately, the news is far from good. Last quarter we saw the most dismally low GDP value since Q3 2009, 0.4%. This month expectations are for even worse GDP, at 3.1%. Looks like the situation is turning for the worse in the US. It was the latest market news provided by ICA FX. Goodbye.